All right, welcome everyone to Take Human Action PA, episode 56. I'm Calvin, I'm your host, and I'm here with a special guest co-host for the night, Nick. How are you doing, Nick?
I can't complain. Typical Tuesday. So,
Yeah, so we had you back on, I want to say episode 29. It was a while ago, talking about Divide and Dominate and Shane Hazel's campaign. And he's back with us now to talk about Bitcoin and everything that he's been working on and some recent updates that have been happening on the crypto front. So, you got any introductory words for us before we dive in?
nothing too crazy. Let's hop right into it.
Okay, so we'll go through our stories that we've got here. Which one are we starting with? The Verge or FT?
Let's start with the FT one because this is Coinbase versus the SEC. And what's kind of
All
going
right.
on? One kind of pulls into the next, right? I mean, it's kind of an overall theme here.
Yep. So let's get that up here. Okay, so we've got SEC asked Coinbase to halt trading in everything except the Bitcoin, CEO says. So we noticed this the other day, and it was trending on Twitter yesterday. So that would be July 31st. And it was, Coinbase and SEC were both trending. So clearly the crypto community was talking about it a lot. Break it down for us here, Nick. What do we got?
Right. So the SEC, the Securities and Exchange Commission, is basically taking the opinion that everything except Bitcoin is a security, which isn't that surprising, especially to the Bitcoin maximalist crowd, because we kind of see where they're coming from on that. There's still the whole libertarian, opposing all the government regulations and everything else like that, but really what we see a lot of times in the crypto space, just a whole lot, what I'm going to say is a whole lot of scams, right? Really, it's hard to see all that much come out of that side that seems legitimate technology or something that has actual value, I should say. Um, what we often see and what's really consistent on that side with like a Andreessen Horowitz, right? They're one of the big ones in this on their crypto thing, right? So what you see happen a lot of times is these tokens will come out on say the Ethereum or some other of these smart contract blockchains like that, and they'll pre-mine, right? So the creators will take a big portion of of the tokens that they're creating, and then they'll sell off a portion of those to a VC firm, for extremely cheap numbers. Then the VC firm, say Andreessen Horowitz, and you can go look at all the investments they've made, and the charts look all the same, right? So they'll take a big position in that. They'll market the hell out of it. It'll pump heavy, shoot straight up. Everyone will get all excited into it, and then the investment side, the VCs are going to dump it on retail, and they're going to, they know when it peaks, they know to get rid of it. They get out of it, and then it all comes crashing right back down. And what's the worst part of that is, even if there does seem to be something that people could argue is interesting or legitimate with it, with that pump and dump, it goes up, it comes back down, and then everyone moves on because it's no longer interesting because it's had a giant run and people were in it trying to make that quick buck. So that's what in my opinion looks like a kind of a repetitive scam here, which you see that happen 2, 3, 4 times, you're going to start getting a little suspicious. And so as much as I don't like the SEC, you see this happen again and again and again and again, and you kind of understand why they're looking at it the way they are, right? And then it goes, so basically the one thing that you look at here that's often talked about in the security side is what's called the Howey test, right? The Howey. Say from ruling SEC versus WJ Howey Co. From 1946, right? So basically, there's a four-part test that they use to determine if something's a security. One, an investment of money. Two, in a common enterprise. Three, with the expectation of profit. Four, to be derived from the efforts of others. So that's kind of the definition of a security. Um, so let's take an example of a lot of these DeFi tokens that exist that were massive in this last giant crypto bull run. The past year or so ago. Um, a lot of these guys, it's yeah, invest your money. If you give your money to us, we're going to return it with 7, 8, 10, 20%, 20% returns, which, is absolutely insane. And, a lot of it'll claim, risk free, nothing bad can happen. But then then you end up having been in FTX or Celsius or any other massive scams that have fallen apart in the past year or so. So, um, as with everything, there's no such thing as a free lunch, or there's no get rich quick schemes. But on a lot of these DeFi, right? So you're being promised a high rate of return. So you're investing money, right? It's, I guess, what you could say a common enterprise, right? Anyone can do it. Expectation of profit. They're telling you there's a return to it. They're telling you it's safe and to be derived from the efforts of others, right? You're not doing anything in it. You're being told, you're putting your money there and it's just going to grow, right? So you've got that. And then especially proof of stake blockchains. So just in, a lot of these assets exist on, say, one of the other blockchains, the Ethereum chain. You can create these tokens on that chain, in that system. Binance has their own. All these other companies have these, their blockchains. I can't say companies. Some companies, some foundations, whatever you want to call it, right? Organizations have their own chains, and they do their own. They do what they, they're, and basically, yeah, you mint your own tokens on it, and so, but so all right. So back to where I'm going with this. Sorry, I got caught off track there a little bit. So on the, even as talking about DeFi there and some of these other applications where you're seeing, hey, yeah, this is pretty clear. But even when you're talking about a proof of stake blockchain, such as Ethereum and a whole lot of these other ones that they're telling you, it doesn't use as much energy as the Bitcoin blockchain. Look at how many transactions we put through on it. Look how much better this is. Right. So basically the way that they're working now, Ethereum recently in the past year or so switched off of proof of work and went to proof of stake. Proof of stake, in my opinion, is kind of crypto fiat, to put it mildly. And so, you're kind of promised, hey, you buy the main tokens, Ether, this, that, the other, and then you stake it and you get a return on it, right? So it looks like you're investing money. There's an expectation of profit, and you're not doing anything for it. It's everyone else, the nodes, nodes processing the transactions and things like that are doing the work, and it's just you having money sitting there and saying, "Yep, we're acting honestly. No need to take our stake away from us." That is, really doing the work there.
Right.
So when you look at that versus this test, it's kind of clear that under, and we can clarify this again, not a fan of the SEC, not a fan of all these of their interferences here, but this is a lot of these do look like they fall under securities by the definition that they're currently using. It's not that much of a stretch to see it. So
Yeah. And yeah, I do have a couple clarification questions there for some for the audience and some for myself. So when you were talking about VCs earlier, you're referring to venture capitalists?
yes, venture capital firms.
All right, got it. Venture capital firms. And then
I guess that Andreessen Horowitz is like the big one there. I forget where it was. It was on Twitter at one point. Maybe it was Corey Clipston from CEO of Swan Bitcoin. That guy's always calling out scams, and I think he had a tweet at one point where he just posted like a bunch of different trading charts of different ones from Andreessen Horowitz, and they just all look the same. You could just see little jump crash like clockwork. So
yeah. Okay. And then the other clarification is, so Ether, is that the new name for Ethereum? Did they change their name?
No. So the token is Ether, right? Okay. The blockchain system is Ethereum.
Oh, okay.
Technically, right? So you have Ether tokens, but it's in the Ethereum ecosystem.
Right. So yeah, my understanding is probably the most common way for people to generate return on any cryptocurrency they hold is to stake Ether. Is that correct?
That's one of the common ways, right? You're either staking Ether or there's all the different DeFi protocols that existed or that exist or did exist. You go and you lock up your assets with the company, and a lot of what it basically, the use of DeFi was just to lever up like crazy, right? So you get people, you get the traders that come in, they're seeing something that's gonna they think, oh, I'm just gonna ride this to the moon, so they come in and stake, well lock up a bunch of assets. It could be Ether, it could be the Bitcoin, it could be any number of things. All depends on what the protocol is and what it is, right? Or sometimes it's a company doing things like this. But for you locking up your assets there, you might get Tether or their token or anything like that, which then you take over to an exchange, and then you buy more of this whatever asset you just locked up. So if you go and you think Ether's you think in token on Ethereum is pumping, you then take it, you buy even more, and so now you're just using that, the value of what you bought to buy more, and you just you're levering up and up and up, right? So you're just taking more debt against the assets that you bought with debt to purchase more stuff that you're going to put and use to take out more debt, and that works until it doesn't, right?
Yeah.
The more levered you get, the harder you fall. So
yeah, well, when you describe it like that, it sounds reminiscent of the all the leveraging that happened, like people taking on debt to buy stocks in the lead up to the stock market crash of 1929 that led to the Great Depression.
Right. Yeah. I mean, leverage is a killer.
Yeah. And I think another analogy that would be apt here is for people who are not familiar with cryptocurrency or staking. Would a good comparison be using your funds to, like, your cash basically, to buy a bond, and your money would essentially be tied up for a certain period of time, but you'd have a guaranteed rate of return over that period for when it's redeemed at the end of that time period. Is that correct?
Yeah, I mean, I don't do any of this, so it's kind of hard. I don't know everything, but it's basically kind of like that. All depends on what system you're using and what you're doing, right? So you go in there and you stake a certain amount, and some places, some systems it might be, you join in on this pool of money, because it all depends on you have to oftentimes, like I think Ethereum and some of these other ones, limit the number of actual stakers, and you have to join in on basically pool your money with a bunch of other people on one of the staking nodes. So, so you might have to put your tokens in with everyone else's on this one, and the operator of it might be promising, this, X% return on it. And, that's what you would expect. Some of it could be, variable depending on what's going on. It really all depends. Some of it's just a pure Ponzi scheme. Oh, a lot of it's a pure Ponzi scheme, right? So,
yeah. And I don't remember if it was in reference to this same issue or not, but my understanding is that Coinbase, their modus operandi when it comes to the SEC has just been, basically sending them memos or emails or something, asking them questions for clarification, like, oh, what should we do to remain compliant for this? What should we do to remain compliant for like this issue or that issue? And they've been getting like little to no response. So they just act based on lack of information. And then the SEC turns around and, either sues or fines them. So it's not even like
yeah.
they're just acting and doing their business and not caring. They've been trying. It's just the SEC is not really working with them.
Well, there's that, and also just the lack of clarification in general, right? I mean, the laws were written for 1920s, 30s, 40s eras assets, and the idea of digital scarcity is a fairly new concept. So
Right.
everything before 2009, a copy and paste, and there was no scarcity on the internet. And with the launch of the Bitcoin blockchain, we had our kind of the first real scarcity on the internet here. So,
this is very reminiscent of the case of the SEC versus library, like RLBRY, because they had their own token, and the SEC went after them and saying like it had to be a security. And I don't know if there's still some sort of case with that pending, but I think as of now, at least, they lost. So in that sense, this may have been only a matter of time.
right. And again, Library Odyssey, great product. He's done a lot of good work there. Jeremy Kaufman's an interesting guy, but it's very what the issue with that was. They did a pre-mine and they sold. They basically, I think it was a pre-mine, and they sold part of it away, or one way or the other. They sold some of their tokens off of an exchange. Right, the company itself sold the tokens without going to an exchange and having a market rate set there. So that's kind of how how the SEC was looking at that there, and different than um that's pretty common operations. Like I said, a lot of these other tokens, that's what they do, right? They take a portion for themselves. They give a portion to the venture capital firms. They market the hell out of it. They, open it up for the public, and then when the marketing kicks off and the price starts going crazy, they dump it and and walk away with nice profit in dollars. So, and everyone else gets rugged. So,
Yeah, that sounds reminiscent of, I don't remember which podcast I heard this on, but there was a bank that was trying to open up that their whole premise would basically be they would they would give their customers the same, or like just under the same interest rate that they were receiving from the Fed, because individuals can't bank with the Fed, only banks can. And they give like a guaranteed interest rate that's higher than anything else that an individual consumer could get. So the whole premise was that they would just pass this on to you, but because that would jeopardize the business model of every existing bank, they just got blocked and blocked and blocked, and the FDIC would not approve them and allow them to open their bank. And now I'm not sure they ever will. It just sounds very similar.
Yeah, are we talking Custodia or
doesn't sound familiar with me.
Custodia was a bank. Custodia is a bank that was trying to open up in Wyoming, and their whole premise was
maybe that was it.
they were going to hold on demand deposits. They were going to hold more. So like say a checking account, right? Demand deposit, something that they expect they were going to be over collateralized on those. So they might be holding 102, 103% of the value of the assets just in cash, so that it, you don't get the same thing you see with all the other banks going on right now. Is, a real business, a real way that you would expect it to work, right? You would, the money that you're expecting to be transacting with all the time should just be sitting there, and then things that are longer term, you have other instruments to either tie that up or user fees to say that. But of course, them doing that, the FDIC and the Fed doesn't like that, because that just messes with the whole way that the bank business model currently works. And so they've been denied and denied and denied, which is especially funny because that bank came up again with as we're seeing more and more bank failures, because the past week we've seen 2 more banks fail. What was it? It was PacWest out on the West Coast and Heartland.
Oh, that's
Bank,
news
I believe.
to me.
Heartland was just like the other day. PacWest might have been the end of last week or something. But yeah, we're back to, well, yeah, because the Fed raised 25 basis points again last week, and it was like the day before they raised, I think PacWest collapsed, and then a couple days after, a day or so after, Heartland went down. So we're back to banks collapsing again, which, the first question I asked when I saw the Fed, I mean, they said the Fed was going to raise, but when they actually announced it, the first question I had was, when's the first bank failing? And then I was like, oh, yesterday. So
yeah, so just remember this: anytime anyone tells you that this is a failure of the free market, because it's like the government is literally stopping competition from opening up and disrupting the existing ecosystem.
Right. Yeah. They won't license a bank that wants to say, hey, we're gonna hold the assets that need to be there when they have to be. Because the issue, right? I mean, where this real problem comes from, and they want to spin the story, Signature Bank and Silicon Valley Bank, those were heavy in the crypto industry. And so with the bear market there, and being invested in rug pull, all the rug pulls and scams like FTX and these things, that's what destroyed it, right? And
no,
not really. No, really, what it comes down to is basically the instruments they're forced to hold, right? They need to be making a return, because you're not paying for services. So your cost, you're loaning everyone knows you're loaning your money to the bank, and you get a little bit back, not very much right now, right? A fraction of a percent is what you get on a savings account. But the money you've got sitting there, the bank, takes that, levers up hard, and they go and they purchase things like bonds. And when the Fed's raising rates like they've been, because that so much money was printed during the pandemic that is finally working its way through the market, the Fed's forced to raise rates. The Fed raises the rates in the bonds they're currently holding, which were purchased at a lower interest rate. What you're seeing is a lot of the banks that are failing purchased longer term bonds, so they're not able to just let just roll the bonds over. They have to go into the marketplace, and a little bit of instability, a little bit of fear from the customers of the bank. Money starts coming out. They've got to sell those assets. So now you're selling, assets worth a lot less into a market where they're becoming worth even less. And and you're insolvent. So, especially
Yeah.
whenever they've been pushed by the Fed to purchase these bonds, which are supposed to be safe and blah blah blah, and so I know one way that the Fed tried to solve this is they were going, one of the ways the Fed took action on this, and which is insane because once again we're looking at another market distortion here, is that the Fed is loaning against the for some of these banks that are in trouble. The Fed is loaning against the bonds at the paper value of the bonds and not the market value. So, like I said, as the interest rate goes up, the lower interest rate bonds become worth less because why buy bonds that are returning you 2 or 3% when you can get one at 5%.
Yeah, the
So
value of your bonds drop when higher interest rate bonds are available.
right, so the way the Fed's saying, oh well, just loan money, we'll loan money to you, at a higher rate than normal, but a bad interest rate, but we'll still loan money to you at the supposed paper value of those bonds and not the actual value of it. So it's more insanity coming out of the Fed there.
Yeah, and here I
So
thought it was
it's
because
once again a giant mess.
here I thought it was because Silicon Valley Bank was funding ESG focused startups, although it might have something to do with it too.
Well, I mean, a little bit of instability and insecurity there, right? I mean, if everyone's all happy and you're having a consistent cash flow in, cash flow out, and it's predictable, no big deal, right? People
Yeah,
get a money comes in, it goes out, there's no worry. But when more money starts going out than you expect, and then you have to take those quote unquote safe assets and sell them into a declining market and sell them below paper value and realize these losses trying to sell it. At which point now you've got less assets and they're lower in price. And I mean, it's just this loop,
yeah,
and you see it. And I mean, it's like clockwork. Like I said, they keep telling you, oh, these were the crypto involved banks and blah blah blah. But I mean, all you
yeah.
have to
Crypto's
do
the
is say,
scapegoat. I mean, it's always
like
the
I said,
scapegoat.
it's when the Fed's raising rates is when you see these banks fall apart because they can no longer pull together. I mean,
Mhm.
they already operate insolvent, and so like I said, we have banks out there, people trying to start banks that would operate, solvently, like good business practices. Here's a good stable business, and they can't get the
Yeah,
licenses they need because um that would ruin the whole system they have
yeah.
made up where they
Banks that
loan you
run on
money.
banks that run on full reserves rather than fractional reserves. If you were able to
Well, not
do
even
that,
that, right?
it would be
It would
almost
be
impossible to fail. Yeah.
right. Well, at least like this is demand deposit, full demand deposit reserves. Something like a
Right.
savings account where there's less expectation of you needing it, but like a checking account, it would be holding the actual reserves there. That way, yeah, everyone can go run. If you try to run the bank on on everything in your checking account, no big deal, right? It's all right there.
Hmm.
But
Right.
in a system
So
where in a system where it exists, where the banks make money by loaning you money that doesn't exist and forcing you to work to pay them back, um, you know, it's kind of insolvent by
right.
definition. So it doesn't
So we
take
have time
much
for
to disrupt.
the next story you sent me.
Um, yeah. So I mean, you can pull that up if you want, but this is continuing down the same path.
Right. Give me a second. I'll pull it up. There you go.
So another SEC action that I came across today. Richard Hart is I forget his real name, but basically he was like I think he was a um, mail advertising scammer guy or something like that. In a previous career, like basically made money by sending ads through the mail or something like that. I can't remember exactly what it was, but he's been out there marketing his token, and kind of wink nod, trying to say it was basically the whole marketing on it, from what I saw, was like, oh, look how much it's gone up in value, and it's just going to keep going up, and blah blah blah, and then wink nod, no, I'm not telling you it's an investment, blah 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 blah, and wait till this, wait for that. And some people were saying there was something there to look at, and every time I looked at it, it just went scam, 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 grifter. So yeah, so the SEC entered a lawsuit against him for basically same thing we're talking about here, Ponzi
This is his
scheme, right?
real
Everyone buys in.
Richard Scoiler.
Yeah, Schuler, I think. Yeah,
Schuler.
so yeah, he was
zoom in a bit.
But yeah, so he raised $1 billion through Hex and Pulse Chain and Pulse X, whatever. It was like Hex was one thing, and it was supposed to be going to Pulse Chain. I could never keep up because it just screamed scam to me. And of course, what do you think, right?
Yeah.
He sold this, and took the money and ran for it. Yeah, made a nice profit for himself too.
Yeah, but now they can't do anything because he's in Finland.
Yeah. So.
Right. So what is this to you? What is this like an example of how
how like everything
is there a nicer word for is there a nicer word than the S word to describe coins that are not Bitcoin?
Not really.
Okay. But yeah, basically, I don't know.
I mean,
I don't think this is the right word, but we can call it altcoins. Is that a better word?
I mean, you can. I mean, it's kind of, but
link to the tweet. But yeah, so altcoins, coins other than Bitcoin. This seems to give at least most of them a bad name. I know, like I talked to the team at Monero Talk, and they definitely make a good case for Monero. But with a lot of other coins, there's definitely risks involved, and the SEC is the best way to tackle it. But
Monero is one of the few that Monero is at least one of the few other ones that you could consider a legitimate project with a feature that you don't quite have on Bitcoin yet. So, and the big thing, right? You look at Monero. They didn't do the whole pre-mine thing. They didn't do the VC thing. So that's, if you look at Ethereum, pre-mine, VC, foundation running everything, controlling it all. That's how you tell in my opinion, a scam on it. It's just Monero itself. It's fine, I guess. It's okay. But I don't see much of a use for it. I mean, I guess a little bit with the privacy, but I mean, we're seeing.
Yeah, that would be the main use for it.
Right. But like, it's trade-offs, right? So since everything's private, you can't audit the blockchain. If you can't audit the blockchain, you can tell in a transaction that the way it works, you can tell in the transaction that like the proper amount that's supposed to be in a transaction was in a transaction, but you can't audit the blockchain. So you can't actually prove that the number they say there are actually exist. Like Bitcoin, we can look and see what address every single Bitcoin ever mined, where it exists somewhere in some wallet, and we can see that. So, or tied up, on the Lightning Network, or we can see that the transactions were made, and we can look at the total ever created, and we can know it exists. We know things are there, and we can tell, we can audit it. You don't get that where it's all obfuscated. And then I believe there's a little bit in their monetary policy where they, if I'm not mistaken, like Bitcoin says 21 million. That's it. That's done. I believe Monero consistently creates a low number going on infinitely. So, I mean, it's not print everything at will, but also like it's falling back into that whole well, a little bit of inflation is good mindset that everyone's raised with. That just a completely incorrect way to look at the economy. So it's
Right.
not. It's just like I said, right now the privacy on Bitcoin is not amazing. There's a lot of tools uh, that are coming online. It's everyone knows it's a problem, and everyone knows things have got to improve on that front in order for people to in order for it to be really useful. So
Yeah.
the lightning network, especially when you're sending the data over Tor, that's a good step forward, right? Because you're on the lightning network, and basically you're passing to this, you have your node, you're passing to that node's passing to another node, that node's passing it to the recipient. And so it's only really showing you to that first step, and then it kind of becomes obfuscated from there. There's still ways you can kind of track kind of where that ended up, where you can kind of tell a little bit. But there's some other layer twos that are floating around out there that I'm not super sure about, that are recently proposed, that we're going to see, that are promising better security. So I don't want to speak to anything until that's proven out on that. But there's some wallets are offering coin joining, which is a way to further obfuscate which coins are going where. And then there's things like uh, federated mints, which I don't want. It's a more complicated topic on that, but my understanding of it is basically like you're going to lock up a certain number of a certain amount of Bitcoin into this mint that's a mint that creates that gives you basically what they call eCash for the Bitcoin, and you're basically free within there to exchange that eCash around. It's locked and signed by several people in there, and it's kind of like the idea of you would come together with people and trust, and kind of all kind of control locking this money up, and then you exchange this other stuff around easier, and then you're able to pull out at any time. And it's more complicated, but it's an older, I think the original idea on something like this was written about in papers back in the 80s or 90s. So like the general concept has been around for a while. It's just been a Chalmian federated mints, and this is an application that is finally coming around. So within that, you're talking about being able to do things without all the public blockchain recording every transaction, which of course isn't sustainable anyway, to throw everything on chain, because the chains are only the blocks are only so large on Bitcoin. So it forces these higher layers, which only makes sense that this base layer, we're doing these large transactions, we're doing the really important stuff there, and then little bits of money here and there we're throwing around, floating around, and coming up with better ways to do it than gigabyte sized blocks clearing every 30 seconds. That way you're always up, always clearing blocks, and always have so much room, and you're dumping stuff in, and you need massive server farms to run the system. And that's how you get centralized. That's how you end up with crypto fiat
Right. Well,
versus
I do want to
Bitcoin.
clarify something. You said that Bitcoin doesn't have like privacy elements to it yet. You mean that could change?
Well, the base layer, like the base layer is public. You can see where things went, right? There's privacy elements, but it's not like super secret. It's not like if you were to look at Monero and try to look at it, and you're not going to be able to see anything because it's their ring signatures, and this thing signed that thing, and you don't know what's where. Like, you're still always going to see, a Bitcoin transaction signed with this, and you're not going to change that. But not on the base layer. But there were, there's improvements that came through. Every time there's something, there's always some improvement that can get better. Like when Lightning launched, I think the addresses that you would do a Lightning transaction to come off of the main chain to lock up Bitcoin into a Lightning channel. I think those were obvious that it was going. I think the address was obvious that it was going to a Lightning channel, and I believe they fixed it so that it looks like any other transaction. So now, if you can't tell, hey, this is going to a Lightning channel, it just looks like it's going to any other address. Well, now you've kind of broken that chain there. So like on the base layer, you're only going to get so good, but as Bitcoin grows and comes out, you're not going to need the base layer is going to be a whole lot less useful.
Right.
Right. I mean,
So
we're going to look at layer 2, layer 3, all these other options that exist. Lightning's a great first step, but has its own issues. And like I said, there's, the federated mints. There's several other layer 2 proposals out there. So, there's sidechain stuff like Liquid or what was that goofy thing that Miami was doing? Like
that I don't know.
I forget what it was. Yeah, like Miami minted. It was like some side chain that communicated with the Bitcoin network, the Bitcoin chain, but let you do all the goofy tokens and stuff. And like Miami minted a Miami coin or something with it. I can't remember exactly what it was, but then like
Right.
Blockstream's Liquid, side chain stuff. I mean that people were experimenting with stuff, and I'm not
Right.
super familiar with those, but there are other things out there that let you kind of hop in and hop out, and there's ways to move around. Like I said, even coin joining, so certain wallets are doing that by default, and trying to ensure that it's not as simple um as a zero proof, zero knowledge proof algorithm or signature system like Monero has, but um you still, the idea is still there. You can still audit the whole chain, and it's still a robust system. It's just you got to be creative with things versus taking the easy way out and just, oh, we're going to obfuscate everything.
Right. So in short, like there have been innovations like the Lightning Network, which is pretty, it's been pretty beneficial on the whole. You could say speeding up transactions, and there's more in the works. Like there's more innovations that people are always working on, and so even with something that seems like a fixed element in terms of like what it can and can't do, there are ways that you can improve it. I think that's what we're getting at.
Right. I mean, like you said, the Lightning Network, not only does it speed up transactions, but we're talking about final settlement of a transaction within seconds, and
Yeah.
for very low fees, for extremely low fees, right? I mean, Strike, right? Strike is a company that it's kind of like a Cash App, but Cash App started doing the exact same thing, I believe, but Strike was the first one to do this. But basically, like their whole idea is we're going to use this Lightning Network as our way of moving money around. So, um, instead of you having to, send money through Western Union to a relative or a friend in a foreign country and paying tons of fees, and it takes time to get there. And if it's about, $100 in some places is worth a lot, and criminal elements might be right around that Western Union waiting to see who walks out with some money. Instead of that, you send from your phone, dollars, it converts it immediately into Bitcoin at no fee, sends that Bitcoin across the Lightning Network where the recipient, you could keep it in Lightning, or you can keep it in Bitcoin, or you send it right to cash in local place. And so, I mean, that's a real innovation there that improves, our failing money system that takes, days to settle transactions on a system that's primarily digital, and you still have to wait for this to get sent there, and it's got to settle overnight, and got to it's a mess.
Yeah. Well, I do want to give you a chance to highlight what you're working on, but I think we can save it until the end, because we can also definitely have you back on in future episodes to give us updates on what's going on in the world of Bitcoin and your activism along those lines. So at this point, I'm ready to go on to certain economist's birthday that just passed yesterday. If you're ready for that.
Yeah, let's do that.
Okay, so yesterday we had Milton Friedman's birthday. So July 31st, 1912, he was born. So if he was alive today, it would be his 111th birthday. So that's coincidentally, that's exactly how old Bilbo was for his long expected birthday party in the Lord of the Rings. So that's pretty funny. But anyway, so yeah, he was a renowned economist that, if I'm not mistaken, founded the Chicago School, champion of free market economic principles. Not an anarcho-capitalist like many people are who follow the Austrian school of Mises and Rothbard, but Chicago School was still has many good economists that come out of its ranks. Like Thomas Sowell is another one who follows that tradition, and I'm sure there's others that I'm blanking on right now, but certainly Friedman and the others in the school have made great contributions, and certainly
And some not so great.
On the free market direction. What was that?
And some not so great.
Oh yeah, that's true. I mean, not that well. I'll start with some of the positives, and I know you had some other aspects you wanted to mention, but to cover the elements that were discussed in the tweet from yesterday. So he challenged the Keynesian orthodoxy. So in the aftermath of the Great Depression and World War II, well, before that, you could say, well, to the extent that Austrian economic principles ever really, I don't want to say dominated, but do they have like a strong say in the economies of Europe and the Americas, or at least in North America? It would be pre Great Depression. But during the course of the Great Depression, Keynes basically snuck his way in there and whispered in the ears of FDR. Next thing you know, we have these big budget spending programs. So he came
when
in.
You're telling when your system tells politicians, "Oh, just spend more and give it, give
Oh
away
yeah,
all
it gives
bunch
them
of free
everything they
stuff,
want. So
and
why
it's
would
going to
they
work
want to?
perfect." But in part of Keynes' defense, there, the modern Keynesian economists pushing into the modern monetary theorists kind of forgot the part that Keynes said, yeah, you spend heavy in bad economies, and then you retract that in good times and pay it back. They kind of have just forgotten this whole pay it back part.
Yeah, as
So
someone who took introductory college level economics, I can tell you, yes, it comes across as very simplistic. It's like, oh, it's so easy. We can just, change the interest rates and, modify the supply and demand curve, problem solved. But no, it's much more complicated than that. The models don't typically do a good job depicting real
well,
economy.
models are fake, right? Models are always fake. I think if there's anything we've learned in the past few years is never make decisions off of models, because they are always wrong, and it always leads you to a bad place.
Well, this is getting into the nitty gritty, but I'm not completely sold on writing off econometrics. I think there could be some limited use cases, but that's getting into another topic. So
Yeah, but it's not good
at
on
any
that.
rate, So he challenged the Keynesian economic orthodoxy, and I haven't read on how much exactly he may or may not have been an influence on Reagan, for instance, but the timing does line up. Right around the time that he was started having an influence in in the actions of the government. Like for example, he like we'll get to the income tax withholding, but one thing he did do is in the aftermath of Vietnam, he led to the draft essentially being eliminated and all volunteer force in the military taking effect from 1973 on. So we do still have to register for the draft, and that's not good. No arguing with that. But at least they haven't used it. I think at this point, if they did, there'd be big pushback, and they know that it's hard to ignore the wars when people are being drafted to do them. So he also reached a wide audience with his free to choose books and television series. Like that was very popular in its time, and people still watch it and read the accompanying book to this day. So definitely noteworthy person right there, and his contributions they do still they're still talked about in libertarian circles today as we are now. So I know you wanted to jump in with some other elements that this tweet doesn't cover, like the income tax withholding. So why don't you touch on that for us?
Right. Sadly, I think sometimes he was being too smart for his own good and didn't realize that, you know, when you're promoting liberty and free markets and then you give a little bit and say, well, this would be the better way to do it, people are going to say, oh, well, it's the free market liberty way to do it if you do what he said, right? So, he said, he, like you said, promoted the more or less promoted the income tax withholding. That way they don't have to come chase you down for money. They just take the money and then you have to tell them that they owe you money back, or,
Right.
and
It
that
was
obfuscates it so that you don't have to write that check every month or every year and realize how much you're actually getting fleeced for.
right. You're right in the sense that in some ways he was too smart for his own good, in the sense
But
that
then,
it was for the sake of government efficiency, but it also, in the process, like you said, does disguise us, how much we're actually contributing to fund the government's projects. And if we had to physically pay it every year, then we'd know exactly how much the government is costing us, and we would not like it.
yeah, I mean, that you don't get to 30% taxation rates, you know, by having everyone write a check for 30% of their paycheck, you know.
No.
You get there by, slowly raising it and taking it, a percent at a time out of people's paychecks and then saying, "Oh, well, you'll get some of it back," and everyone will go,
Yeah,
"Well,
I
give
think
me
if you
that money
did,
back on my tax returns."
I think if you did, you'd find uh, first you'd notice uptick in heart attacks around tax day from people having to write a tax with a bit like a check to the government with like five, 4, 5, 6, or 7 digit figures on their checks, and then for the people who were left over, they would be out in the streets pretty quickly.
Oh, yeah. So, you had that, and then the other big thing that he, kinda pioneered a lot of libertarians who fall into the, "Well, UBI is alright, it can kind of be libertarian," go back to, Milton Friedman, and I think oftentimes they're falling in line with some of the popular thinking on it and then crediting Milton Friedman for, well, he kinda said something like that with his negative income tax, concepts and things like that, but, basically, he gives cover to libertarians claiming that UBI is okay within the principles, and that's just not true.
Right.
You
So
can't give everyone money out of nowhere. You've gotta tax it from somewhere first. Like, the government doesn't have any money, it doesn't take from you first. So let's just get past this concept that UBI fits into this anywhere, any way, shape, or form, and go back to, real stuff instead of playing these stupid unprincipled games.
Mm-hmm. Well, I think we have enough time to jump into the last topic for a couple of minutes before talking about your latest project and then closing out. So I'll pull that up real quick. Oh, closed it by accident. That's not it. Okay, so July 31st, yesterday as well, was also Hawaiian Sovereignty Restoration Day. So, as people may or may not be aware, I imagine most 40 people, at least in the 49 states outside of Hawaii, are not aware of this. Hawaii was once its own sovereign nation. Like I've talked about this a couple times on this show before, but it's important to emphasize. Like they had their own monarchy. They were the Kingdom of Hawaii for basically the entire 20th century. They even sent like their heir to the throne and royal princess to I think it was the Golden Jubilee or the Diamond Jubilee, one of them, for Queen Victoria. So she was received alongside all the other European monarchs and the representative of the Emperor of Japan, and I believe the Japanese monarch and the Hawaiian princess were sat next to Queen Victoria, because the way they arranged the seating at the table for the banquet that they had was they did all the like geographically the monarchs that were furthest away would sit closest to the queen, and then it would go on down. So like if they had a monarch coming from Spain or something, that they would sit at the far side of the table, and then the future queen of Hawaii, who had been sent as their representative, was sitting right next to the queen. So they were treated as their own sovereign nation, even by the European powers. But I should throw in the addendum, though, that the original source of the holiday itself, Hawaiian Sovereignty Restoration Day, it comes from the fact that in 1843, there was a brief occupation by the British Navy, but it was not actually approved by London. It was just something that they did on their own. So once they figured it out, the government at home, they essentially told them to cease and desist. So they stopped
but
it.
still enough there that keeps that Union Jack on their flags.
Well, that's the thing. So basically what happened in the aftermath, I don't know if it was like right before or right after, but they presented the then Hawaiian monarch with a flag. And, that was their way of basically saying, like, we own this territory now. And even after they regained their actual sovereignty, for whatever reason, they just kept it and adopted it as part of their flag. Because it was a big deal to them, because they took it as like them being recognized as an independent nation by the European powers in the form of that gift. So, yeah, in that sense, they kept the flag design for their state flag. So, in 1843, their Kingdom of Hawaii remained unmolested and independent until 1893, when a similar incident to the British, what happened with the British, happened with American troops. I believe it was Marines, basically occupied several parts of Honolulu, government buildings, and basically set themselves up to have a confrontation with the Queen's Guard. But the Queen didn't want to spill Hawaiian blood, so she basically gave up without a fight, even though she outnumbered them.
It was at the behest of the American businessmen coming in, setting up sugarcane farms and the other
Correct.
farms.
That's the only reason there was a conflict in the first place, because of
because
American
they,
and British business interests.
Common
So,
story.
so even though Grover Cleveland refused to annex the country, like he was not he was not in favor of imperialism at all. The president after him, William McKinley, who also it also started the Spanish-American War under his watch. That tells you how much of an imperialist he was. He gladly pushed it through. So Hawaii became a territory and then a state in 1959. So that's kind of how they ended up with us. It was not by the consent of their people at all. It was essentially a coup. But even in 1993, U.S. Congress passed an apology resolution acknowledging that the overthrow of Hawaii's kingdom was illegal, but no efforts have been made to grant the former nation its sovereignty or, even more, or even just like self-government in any form. It's just
No, because those
created
military
a
bases in the middle
state.
of the Pacific are too valuable.
Yeah,
I
I
mean,
was there
that's
recently and I saw the bases that they have on the island. There's whole areas that are fenced off which are probably nuclear silos. It's no joke. They have
like
really
giant
fortified the
portions
island
of. I
there. Hmm?
mean, yeah, giant portions of Oahu are just military bases.
Yeah, yeah, that
So
too. I saw
then
some of them. I saw some of the ones on Kauai, which is the westernmost of the major islands.
and then
So
there's one of the islands that's unoccupied because it's basically been used as a bombing range.
that I'm not aware of. There is an island that is
Yeah, pull up the map.
unoccupied just west of there, but I thought that was for the natives.
Yeah, no, it's right off of Maui. If you pull up a
Okay,
map.
You're not thinking of Lanai, are you?
No, it starts with a K.
Okay, I'd
Um,
have to look it up then. I'm not sure which island that would be.
pull up the map. Let's go to the map.
You want me to pull up a map? Okay,
Yeah,
let's.
pull up the Google map real quick.
Uh, Hawaiian Islands.
Okay.
Which one?
Well, where you're seeing in the Maui area there, it's like the
Oh, it's like
southern
you have to
yeah,
zoom in
it's like
more.
right off the yeah,
Okay,
yeah. But it's like
I can check
unoccupied
the
and
map
basically a
for it.
yeah, that's basically like in a bombing range, basically.
All right, I'm
And
gonna
then like the Big
gotta
Island, there's
check that off real quick.
military bases there too. I remember passing when I drove around out there.
You said it began with a K.
I believe that's what it.
Okay, so
Yeah,
this one, Kaloi.
yeah,
Oh, okay, yeah, I'm sure I'm pronouncing it wrong,
yeah.
but okay, I didn't.
I
I was
believe
not
I
aware
believe
that's
that
what
one's
that was.
unoccupied and has been used as basically
Yeah,
an
there's
ordnance
some
range.
beaches there, but I think if you actually look at it, it's almost all cliffs, so it's nearly impossible to get on there anyway, even if you tried. But yeah, I guess I would not be surprised. As these three
And then
all
like off the
used to
Big
be
Island
all
coming off of Mount
these three used to all be one. Actually, I think all four of
yeah.
them all used to all be one island at one point.
Well, they're all the same mountain. And then the Big
Correct.
Island coming off of like Mauna Kea towards the western side. I remember there's like some other big ordnance range there or something that they blow up a bunch of stuff. I remember driving that, but
Yeah, that would
yeah.
not surprise me.
But
All
then
right, so
you look at some of the further stuff. So I mean, you're talking about some of the other islands there. Um, uh, one of the other islands in that area, Lanai, uh, that's completely owned by Larry Ellison of
yes,
well, not
I did
completely,
hear about that when I was
95 or
there.
something percent
He's the
is
Oracle
owned by
guy,
Larry
right?
Ellison of Oracle, yeah.
Right. Yeah. Okay.
And so
Right. So
like everyone there is employed by him. Like there's very little bit of
yeah,
land,
the
very little
native
land.
Hawaiians they don't like the fact that all their land is being bid up by Hollywood elites. It's it's certainly not something they're a fan of.
Or Silicon
But
Valley elites, because there was that whole Zuckerberg thing a while back where he
yeah,
was
yeah,
buying up a ton of
Zuckerberg
land and
has some
blocking
big properties there too.
access to.
Yeah, there's even been some certain famous individuals who've tried to block off access to the beach, which is technically illegal because all beaches are public in Hawaii, but they try to do it anyway, and yeah, they just piss
Like
everybody off.
Zuckerberg.
Okay, but in
Well,
conclusion,
tragedy of the commons, but
yeah, but in conclusion, this flips the secession narrative on its head for anyone who says like secession is always bad. Well, I mean, you have what's clearly here an illegitimate overthrow of a sovereign nation that was against the will of the people, and if there's ever a case to be made for, in terms of a historical case for a state to leave the union, then this would be it. Yeah, so it's time to reconsider the status of Hawaii as a U.S. state, and if you want to learn more about that, I actually did an episode with someone who's a native Hawaiian and trying to bring back the traditions of the native Hawaiians that have long been forgotten by all but a select few. So let me look up and see what episode number that was. That was episode 53 when I talked with Daniel Anthony. So definitely check out that episode. He's doing some good community action on Oahu. Yeah. So any final thoughts on that?
no, I think that covers it. I mean, there's it's been admitted that, yeah, we overthrew your government on the request of, American businessmen who wanted favorable relations to, further take their money, to further their own goals. And I mean, it's well admitted, but it's still, instead of asking the people there, what do you prefer to do? We still hold it as a state and claim its legitimacy. And the right thing to do would be to, let the native people make their own decisions on it. Let people of Hawaii determine what Hawaii does.
Yeah, just like when Woodrow Wilson went to the Versailles Peace Conference after World War One and said that everybody should have self-determination, and simultaneously the U.S. was basically occupying Nicaragua and other countries in Latin America too, basically enforced like its own will on Cuba as well. Like they had a foothold in almost every Latin American country during that same time, and they still went to Versailles. It was like, oh, we need self-determination for everyone, but no, apparently.
We still hold part of Cuba as American territory, even though we have no relations with Cuba.
Don't even get me started on that. we could go all night on Guantanamo Bay, but I do want to get to your latest project. We've been teasing it a little bit with the episode graphic, but tell us about the Bitcoin Caucus.
Yeah, so that's my new project here. So I wanted to, for a while, I've been thinking we're not doing enough as a party, as an organization to promote what I see as one of our best solutions that we have out there right now. A lot of us who are well versed in this understand the economic issues ahead of us, the issues with the dollar, the issues of the Federal Reserve, and we still say, start the occasional "end the Fed" chants, especially when Ron Paul's around. But we have a solution here that we can start to work our way out of that system. And the more people who individually start, it's a system that doesn't require any force for that to happen, right? All it takes is you to say, I'm going to go over here. And then someone else goes over here, and then someone else, and everyone, saving their money in Bitcoin, or using Bitcoin, building that network is, slowly chipping away at the power of the Federal Reserve, which right now is, also getting power chipped away by China, Russia, BRICS, this whole BRICS agreement. Um, Basically because they can't back up what they've overextended themselves and they can't get out of it. And I think people are starting to realize that. So we can, we can, we have a solution here that solves a whole lot of these issues, that sets the incentives right back, correct in the economic system. And all it takes is, to stack some sats. So, uh, you know, it's kind of weird. So I decided I was going to come up with this. You remember during the whole yoga pants drama?
Yes, I remember.
Okay, so for anyone who doesn't know, Yoga Pants was a woman on Twitter who came out of nowhere and kind of started demanding, "Hey, the LP needs to do more on health freedom stuff because that's a good market." And a whole bunch of people reached out and said, "All right, like, what do you want to do? How, what can you do? How can we support that?" And blah blah blah. And it was basically, well, I want someone to do an Instagram live stream with me, and blah, blah. And it was just kind of turned into this whole like giant grift. It seemed like just kind of clout chasing, trying to get you know on the party accounts and just call attention to herself is what it basically seemed like. But that kind of set off like, well, I think it makes sense to kind of come together on these single issues and start building, sort of sub organizations, these independent organizations to support candidates, support things like that beyond just the large caucuses that kind of do everything and kind of have overall broad principles. It kind of made sense to start supporting things individually, coming together, and also marketing it towards the Bitcoin community, which by and large, agrees with, a lot of people in that community agree with especially the best communicators, best people who write it. I mean, if we want to go down the list of like the best people to pay attention to on that, Saifedean Ammous, the author of the Bitcoin Standard, the Fiat Standard, and the recently released Principles of Economics, is an Austrian guy, and that book is kind of the authority on Bitcoin to a lot of people. The At least from a theoretical perspective. The Some of the biggest podcast guys, Guy Swan, Marty Bent, Stefan Livera, these big names in that space, all kind of fall into this Austro libertarian, uh, you know, area, and so do a lot of people who follow it. But we haven't been getting any traction, and a lot of Bitcoiners want to be with other Bitcoiners, and so to have something branded specifically, hey, this is what we're doing. We're focusing on this right here. Come join us. And I think there's a way in to market to that demographic and bring them in and say, hey, I know you've been focusing on this, and yes, Bitcoin fixes this a lot of the times, but there's things it doesn't, and there's things we can do outside of that come with big returns for relatively small effort, to further promote our worldview and our policy prescriptions and things like that. So that's kind of where this all started, was especially because things as far as caucuses in the LP have turned into basically, the big caucuses, Mises radical, classical liberal, and blah blah. But there hasn't been any great single single issue ones since I guess outright was the biggest one with that had like a full organization going, and then they kind of changed their name to no longer say libertarian and threw a big tantrum after Reno and then fell apart. So there's kind of been no individual organizations doing anything like this to promote that. So I figured, well, it's time to step up and see what we can do with this. So, I'm trying to work out details. I want people to, join up with us. We can, we want to do I want to build an actual leadership team on this. I want to be in contact with all the state parties. I want to get in contact with people in the space doing big things, pushing legislation that we could get on board with. One of the guys who spoke at the LPPA convention, Dennis Porter, is put in his Satoshi Action Fund. Um, he's pushing what's it called, right to mine legislation around the country, saying, hey, we have the right to mine Bitcoin here. I think it's been successful in like Texas, Montana, places like that. So I think it would be good to, I think we can all get on board with something like that. And I want to be able to bring a team and get people supporting these things, educating candidates, hopefully providing support to candidates who are pushing this. Really educate our candidates on this. And, I think it's easier when a candidate can bring a real solution and speak well to it versus this whole, well, we have the right letter next to our name, so we're just going to run. And then if a bunch of us win, then the world's going to be fixed, which just isn't the truth. It's never going to happen that way. We have to take little pieces here and there. I think providing real solutions for real people's problems um, is the first place we go on this. So that's kind of where I was looking at on that. And then from the Bitcoin perspective, I mean, what you see in the Bitcoin community a lot is a whole lot of, some weird things that kind of work their way in tangentially to it, right? There's often, if you look in the super maximalist circles, a push towards red meat diets. There's a lot of promotion towards like Texas Slim's beef initiative, trying to connect, hey, connect with your food supply, eat red meat. And then, seed oils, avoid seed oils, blah, blah, industrial waste. A lot of stuff that kind of comes in as, hey, this people see, can kind of say, hey, this was the result of a fiat culture, fiat monetary standard. And let's move away from that. And I think there's a message to be had there to say, focusing on these national level issues and fighting about it has been kind of fiat politics, right? You fight one side, you're forced into one side or the other. You fight it, nothing ever happens. No matter, everyone who promises terrible things, politicians follow through on the terrible things and not the good things they say they're going to do. Um, And so kind of pushing this return to localism, which has been, the Mises Caucus message also. But I think that, if we want to decentralize the money, especially in other things like Noster decentralizing communication, social media, online, why not start trying to decentralize, government down to the local level, from government to governance. So I think there's a message there. I think it make a lot of sense in this space, and I want to try to um, bring people to that as much as bring people in who see that value and see the value in stepping up to run a race in your local community, protect your community, your family, your friends, uh, you know, from the insanity that we see on a daily basis. And you can do that, um, fairly simply. I mean, we look at some of these races, Calvin and I are in PA. There's a ton of elected offices in PA. I mean, there's stuff everywhere, everywhere is somewhere. So, I mean, the tiny towns have elected offices and so there's what in a single county, probably hundreds, couple thousand positions that are open for election in municipal election years. So there's plenty of opportunity. A lot of those, you might have one opponent. A lot of them we find have zero opponents, right? You can just hop in there, get on the ballot, win, and take that spot. So this is an attempt, this is also beyond so like I was saying, beyond a reason, an outreach and an educational arm internally. It's also a, hey, you guys belong over here with us, the people who aren't here. So that's kind of my plans and where I'm going with it, at least ideally. And so we're slowly working on this and getting started.
Yeah, we'll have to have you back on once you've done a more formal launch and go into some of the details of what you're starting to work on there. Because I think it's important to highlight that you're going to be doing some outreach to the Bitcoin community from the Libertarian Party and the Libertarian standpoint, and showing how our interests align. But it's also good, which, I mean, you've already done this. You've already done some classes on essentially Bitcoin and crypto education for libertarians and others as well, and that's definitely a good way to go about it.
That is one thing. Like in Georgia, last summer we did an in-person class for. I mean, it was marketed generally as kind of intro to crypto, but really, I mean, it came down to like us with Bitcoin. With yes, other stuff exists too, but that's where our focus was, because that's where it was myself and Zach Varnell who did it, and both of us see the value in Bitcoin and see less value in the other stuff. So that was easy enough to kind of go with. And then we there was supposed to be an online one that I think Zach was putting together. I think that fell through, but there's opportunities to further expand it. I mean, I have a presentation from that. That was I think it was a 3 or so hour class, court class. I mean, there was a little bit of breaks and a little bit of Shane speaking and stuff like that involved with it, but I have some materials to begin some educating on it. But I think engaging with some of the best voices with it, some of the people doing the policy work that might have ideas of, hey, here's local policies you can push, here's local things you can do, here's state level things that we're trying to push and go through that we can get involved with and further push, because there's still a as much as I think there's an anti-politics resistance in a lot of the Bitcoin community now. Bitcoin's expanding. There's progressives coming into it. A book was just recently released called A Progressive Case for Bitcoin, right? The progressives are starting to make their way in, and I don't quite understand all the arguments there. I kind of understand a little bit, but also it's like, this system stops everything you think you want. I mean, you can no longer just give everything away for free if you go on to a sound money standard. But within the so there's a way we've got to stake our claim on this in Bitcoin, because it came out of the Austrian tradition. It's libertarian by its nature. I mean, that's clearly obvious from the initial days, and the cypherpunks and crypto anarchists that built the pieces that eventually became the system. And then of course you still have plenty from the libertarian side who, well, it's just digital junk, blah blah blah, the Peter Schiff types, or the old gold, gold's the way, it was money forever, blah blah blah. If we just go back to a gold standard, everything will be fine. Neglecting the fact that the gold is what led to fiat, because you can't transact gold very easily, and gold moves at this gold transactions move at the speed of transportation, and fiat was able to move at the speed of electricity. So it kind of, at the very least, the properties that made gold good for so long kind of left when you went into a digital era, and you've got to be able to move value across borders at lightning speed. And now we've got a system where it can't be inflated away, it can't be controlled by some central entity. It moves even faster with final settlement than the fiat system. So I mean, it's an overall better better solution to the problem.
I would have some clarification questions to add on to that, but we're already like 25 minutes over our normal episode length. So
I'm good to keep going a little longer if you want to dive in. I don't care. We can do 1 or 2 on this. That's fine.
Okay. In 2 minutes, why is gold in any form, including any sort of gold-backed security, inferior to Bitcoin?
You come back to the same issue you had previously. You're reliant on third parties to secure it. You're reliant on third parties to audit that everything's there. It's all this trust. Oh, you've got to have it. So you're gonna end up back basically into you might the tendency is going to start pushing back towards fractional reserve on it. Well, we have all this gold sitting here, so we might as well loan some of it out, do this, do that, use the value that's sitting there. And even if not, I mean, you're still trusting that everything that they say they have, you're going to have. You can't verify it. You're going to have to trust the company to verify it versus, like I said, with the Bitcoin blockchain, anyone can go verify the ledger and determine, yep, there's only going to ever be 21 million Bitcoins. And as of right now, 19 million ish have been created. So we can verify how many exist. We know how many there are going to be. We know where it is, generally what addresses things went to. Like, things aren't coming out of nowhere. We don't have to rely on final settlement being packing up gold and sticking it on ships and moving it across the ocean. You don't have to, if you try to create a digital security, a token representing gold, as some people have, you've got the same issues with, you have to, you've got the same issues that tokens can be printed as easy as money. And so you're back to the same thing where, yeah, nominally there might be some gold underlying it, but they're going to rely on the fact that, it's human nature. It's going to rely on the fact that well, if we're a little bit off, no one's going to catch it, or you know you you just can't transact. You can't transact in physical gold, right? I mean, you can't carry it around. You can't break it off into small enough pieces. It just turns into a giant mess there, and you end up back in the fiat system.
All right. Well, we'll have to leave it there because I think that could be an episode topic by itself. I do have to cut it off somewhere. So, how do people reach out to you, follow you, and the Bitcoin Caucus? How do people get in touch with the Bitcoin Caucus?
Right. So you can follow us on Twitter at Bitcoin Caucus. So that's nice and easy to remember, at Bitcoin Caucus. If you want to get in touch, you can go to our website, bitcoincaucus.com, which is currently blank except for a form. So you can sign up right there, and at least we'll have your email address. We can get right back in contact with you, and especially keep you informed of things going on as we're moving in. And then also from our Twitter account, you can go to our if you click the link tree up in the bio, link tree, whatever it is, linktr.ee, or however the link tree works. The username on that is also Bitcoin Caucus. We have I have a link to a Signal chat, which is basically just going to be notifications there. But if you hop in there, I can send further links or whatever. And then we also have a link to the Discord, our Discord that is in there. And I encourage everyone to hop in the Discord because I'm trying to build it not into just like a Bitcoin Caucus community, but also a resource. So, there's of course a members chat for anyone who actually wants to be a member, but if you get in there, there's public space with a bunch of resources and stuff that I'm eventually going to hopefully start getting built out, where, we have reviews on different wallets, reviews on this, reviews on that, step-by-step instructions. That's kind of my goal, is have that kind of be a real resource for
Yeah, you got your Twitter, Facebook, Discord, Signal, and an email on here on the link tree. Showing
Yeah.
up on the screen now. And the Twitter as well at Bitcoin Caucus. So thank you, Nick. It's been a great talk. Thanks for bringing us up to speed on everything that's been going on in the world of Bitcoin. And we'll close it off here. So we'll be back on Thursday of next week with another guest. So until next time, don't forget to take human action.